Hello everyone, welcome to the 10 Linux channel. In this video, we're going to take 4 stocks and all of them have a very good potential of giving at least a 50% return, and I expect this returns to come probably in the next 6 months or so. And all these 4 stocks are from these two scanners that I'm showing on the screen. 3 stocks are from the weekly reversal scanner and 1 stock is a medium term breakout scanner which I'm going to discuss today. And these 4 stocks are from the auto ancillary space, one from the metal space. The metal space is looking really hot. One from the refinery space, which is also looking and probably picking up short term momentum. And the last but not the least is from the capital goods space. So these are the 4 stocks we're going to discuss today. And 1 stock I'm going to discuss fundamentals as well. So stay tuned till the end of this video and let's get started as always with the Nifty outlook. So Nifty had a very bad week in spite of all the SVB noise in the US and all of this. Nifty is still managing to hold around that major support zone over here. Now remember, the support zone, you can see a lot of wicks around the zone, which means there is still demand around the zone, and I don't see Nifty breaking the zone. And probably tomorrow, if there's a gap down, I think it might be bought and we might probably head higher. Now remember, the SVB whole fiasco of SVB, I think might be a very big trigger for the Fed to stop hiking rates, at least not the 0.5% hike that everyone is expecting. So either it'll probably be a nil rate, there will not be any rate hike, or probably a 0.25% rate hike is what I think the Fed would do. And having said that, I think markets should start reversing from here on. We might probably make a bottom next week and then probably head higher. Now, please take this with the precaution because markets no one can predict, but this is all based on certain probabilities that we look at from a technical analysis perspective. Okay, so that's from a Nifty perspective. Moving on to the Bank Nifty still has some area there. So the major support is around the 39,700, 800 levels. So we might again reverse from here, and I don't expect Bank Nifty to break. But remember, in both the cases, if we have a closing below these levels, then we're going to have some very strong pain in the markets. Do stay light in that case. Okay. And last, I want to also discuss the small cap index, which is still consolidating, which is holding very strong in spite of the pattern that Nifty is making. So small cap is still consolidating, and many stocks are actually looking good. And I think the broader market is not that bad compared to what we had a gap down as on Friday. So overall, markets might rebound, and that's the summary that I want to say before I jump into the 4 stocks. Okay, so the first stock that we're going to discuss today is from the auto ancillary space, which is Subros. Now, fundamentally, this company is pretty good, or in fact, not very good, but decent. But the technical is looking very good, and that's why I'm covering the stock today. So, in terms of fundamentals, Subros, if you look at these numbers over here, 2018 is when the stock peaked, and since then, the stock has not really crossed that 2018 highs. The stock has been consolidating, and that happened right when we had a very good sales number in 2018. After that, the sales number has started stagnating, and we are still around that 1900 mark, and we had 2200 crores, and now the last 12 months is 2700 crores. Now, also the margins have taken a hit since 20 odd levels, and PAT also has kind of stagnated, and we're not going anywhere. But looking at the trailing 12 months, I feel the sales have started picking up again. Margins probably might pick up again soon, probably next few quarters or so. But overall, I think in terms of fundamentals, in terms of the annual numbers, I think they have made probably a bottom, and we might see a trending sales numbers going forward. Now, remember, Subros is actually a very good company, and it is a market leader in the air conditioner space for the vehicles, cars, and all of that. So, taking a look at the balance sheet, now this is a very significant point in note, right? So, if you look at the borrowings kind of went up all the way until 2018, 2017, 2018. And since then, the borrowings have started going down. We've gone from almost 400 crores to just 24 crores in borrowings last financial year. Now, that's very good in terms of the company's balance sheet. Remember, this will add on to the PAT, which is the bottom line, and the company might start posting decent results when the operating margin starts picking up and heading back to those 10%, 11% mark that we had in the past. The last thing that I want to discuss also from a fundamental perspective is the shareholding pattern. Now, look at how DIs have been lapping up on these shares of Subros. We've gone up from 8.4% in March 2020 to almost 13%. Now, that's a significant hike in the overall shareholding from the DI perspective, and that looks pretty solid for me, and that's why I'm really interested in Subros today. I'm going to look at the technicals now, and I'm looking at the quarterly chart here. Now, somewhere in 2018 is when we had a breakout in Subros around the 40-50 levels. We went all the way up to 400 levels. That was a 10x jump, and we dipped again back to 100, and now we're back to around those 300, 350 levels odd, right? So, and what has happened is after this 3 quarters of move up, we have been going sideways in Subros. Overall, the stock has just been going sideways for the last 2 years or so, and this is just a pure time correction towards the trend line. Now, this is a significant trend line because we had this point here and this point reversal here. Again, many stocks actually have corrected towards the trend line and again retested. So this is one of those. And if you look at the quarterly charts, the volume has been falling, and we had one of the lowest volumes in this month, in this quarter. And overall, the stock is doing time correction, and we might head higher soon. Okay, remember, trend lines are very significant, and I think since the volumes also are drying up, I think the selling might stop sometime, and we might head higher again. So just zooming into the weekly charts, now this is what has been happening since the last 2 years, right? We've just going sideways. We had a breakout, but we've been going sideways around that major support zone. Now this is a very, very significant support zone because we had a breakout and one, two, and third time, right? And we had a long week last week, and this week we had an inside bar. So overall, the volumes have completely dried up. If you see, we've hardly had any volumes, and I think we might head higher starting the next few weeks or probably next few months, right? We might head towards levels of 400, and above that is when we're going to see some really good rally in the stock, and I think we might head towards 600. Now that's almost 100% returns from the current market price. We're going to just keep a stop loss of 9%, and we'll look at target of 100% returns from here. Now that's a risk reward of almost 11 times the risk that we're taking. So if you allocate 5%, you're going to get some really good rewards. Do let me know what you think of Subros and my analysis in the comment section below. Okay, so that's the first company. The remaining three companies, I'm not going to look at fundamentals. The second company that we're going to look today is HEG from the metal space. Now remember, the overall metal index as such has reversed from very significant trendline support on the linear charts. I posted this on Twitter. You can find the chart on Twitter. Just search for demand supply investor and CNX metal, and you will find the chart. I posted last week. Now, given that the metals index overall is reversing, I think there should be at least one stock that you have to consider. You can consider SAIL, you can consider Tata Steel, JSW Steel, but I wanted to consider a high beta play here because high beta is where most of the money is made and not really large caps. But if you want to play it safe, you can choose SAIL, JSW Steel, Tata Steel, Hindalco, or any of these companies. But here we're going to focus on HEG monthly chart. Now, if you look at HEG monthly chart, since 2017, we had this massive rally and we had a dip. Now we went up again. This is a clear middle of the channel. We had a reversal here. So that for me is a very significant channel support, resistance also, and now we are again reversing. Now remember, Subros also is reversing from a trend line support. The trend line is the same trend line, the COVID trend line. Now all these stocks I'm discussing today are reversal setups. So if you want to really learn reversal setups, rewind this video and see it multiple times. This is how I catch reversal. They first come on the scanner, and then I look at the charts and I see if there's a setup, right? And if this setup is here, we are reversing from the significant trend line. And already see, if you look at almost 6 months, 7 months back, we had this long wick. We had 2 months of upside, and again we are going sideways. But there's not much correction happening now. Last 4-5 months has just been sideways. It's literally one candle after the other. It's just a sandwich pattern. There's no pattern of sandwich, but it's kind of a sandwich just sticking together, and that shows there's some tight consolidation happening. Now this is a 9-month base consolidation just around this previous support zone. Exact similar setup to Subros, and I think the trendline retest is complete here, and we have one of the lowest volumes we had in Feb 23, and the last time we saw such volume was somewhere around May 2017. Now lowest volume means that the stock is completely there's hardly anyone to sell, and that's why we have some of the lowest volumes, and that's a very good sign for the stock. Now if we break out above the zone here, that's when we see some significant movement in the stock, and that's when you have to go big and make money. Zooming on to the weekly charts here, again, if you see, that's the zone I'm talking about. If we break out above that zone over there, that's when we have to be aggressive and try to take a good position size and make money. But again, this is support zone I was showing. The major support zone around those 900 levels is where I see some strong support, and the volumes have been good. The green bars, wherever you've seen a green bar, and the volumes have been good, and I think we are good to buy the stock at current market price, which is around 1000. Keep a stop loss of 10%, but here we're going to look at target of 160%, which is 2600 levels. The 2600 is nothing but the previous all-time highs. I expect at least we should go towards that zone in the next 6 months to 1 year if the markets do well, especially if there's some momentum in the small cap space. This stock should be in your radar. Okay, so that's the second stock. Now before we jump to the third stock, I know I've been covering a few stocks in the last few weeks, but major question is how do you buy these stocks, right? Now, given the current market conditions have been very weak, I've been making videos. How should you buy it? Now, remember always your first position that you buy, right? You don't buy everything, all you plan in one attempt. You plan it in different phases, right? You buy a stock first, then you try to see if it moves, then you add more, and then you finally, if you want to add even more, you can add more. But here I suggest you take first a small position of around 2.5% to 5%. It depends whether you're a swing trader, positional trader, or investor. You can ping me on Twitter or make a comment in the YouTube's comment section, and I can help you define your position size, or at least I can guide you to define your position size. But ensure the risk on the first position is not more than 0.25% to 0.5%. That's the first rule. Now, once the price crosses the previous swing high, like in HEG here I mentioned, you can take a position right now, but once it crosses the previous swing high, that's when you know that the trend is now changing. Then you go full on and you add whatever remaining quantity you planned for. Now, what should that quantity be? It can be up to 25% for swing traders. So if you have 1 lakh, you can put up 25,000. If you're a positional trader, you can put up to 10,000 if you have 1 lakh. But if you're an investor, if you have 1 lakh, then just put 5,000. I don't go beyond that. And your maximum position size, this is what it should be, depending on what kind of trader are you or if you're an investor. But if you're really experienced, then sky is the limit. Go ahead and even take a 30% or sometimes even 40%. Some people take. Go ahead and try it and see if it works, right? But ensure that your risk on the entire position size that you have after adding all of these positions, it shouldn't be more than 1%, 2%. Which means if your stop loss hits, then you should not lose. If you have 1 lakh capital, you should not be losing more than 1,000 rupees to 2,000 rupees. So that is the most important point from this video that you have to take out. Always keep a stop loss, define a risk, and take a trade. So having said that, let's move on to the third stock for today, which is MRPL, which is the refinery space. It's also owned by ONGC. 70% of the share of this company is owned by ONGC. Overall, again, the stock also has a similar setup, exactly same setup to Subros, and also the second stock that we discussed, HEG. We again had a strong breakout. We went all the way up and we kind of retested. Now remember, all these stocks are reversal setups, and this is how you catch reversal setups. You need to look for a strong green candle. If it is there, it's very good. Otherwise, you can wait to take a position, or you take a position, very small position, and add on as and when stock heads higher. And also, we've reversed from this beautiful, significant long-term channel here. Now look at the significance of this, right? We have 4 touch points. Now this is a very significant channel, and if you break this, this is also a confluence of supports. So confluence is horizontal support plus trendline support. So when you have 2 supports acting together, that's a confluence, and that support is very significant and might really hold on, and the price might head higher. Okay, also look at the CCI and RS. CCI, it has now is turning into a positive territory from a bearish territory, and also relative strength is doing well, which means the stock is outperforming the markets. In spite of the market going down, the stock has gone sideways and not much downside. So you can consider this stock also as one of the stocks in your portfolio, but purely from a technical perspective. And I expect the stock to head towards this channel support here, channel resistance here, which is around 90 levels. So if you look at the daily chart, here we have this previous swing high. As I always say, look for trendline breakouts, but also wait for the previous swing high to be taken out, because that's very important to signal a change in trend. And once that is done, then you can go ahead and buy. Now the candle has been pretty big, so the stop loss is pretty deep, around 17%. So you can wait for a short consolidation, or if you don't have patience, you can buy now. But on the next consolidation, add more if there's a short consolidation, and then if it breaks out again, right? That's how you should buy. So buy at current market price with a stop loss of 17% for targets of 90, which is 3 times the risk that we're taking. So that's the third stock. And the last stock that we're going to discuss today is ISGEC from the capital goods or engineering space. Now this is a beautiful monthly chart, one of my favorite patterns, which is the inverted head and shoulders pattern. If you see, this is a beautiful inverted head and shoulders. We had the left shoulder and the right shoulder almost at the same levels, a deep ahead. And I think this consolidation here, which is happening again in the reversal setup, this consolidation which is happening might end shortly. And we've seen this beautiful candle forming this month. The month is not yet over, so it can always come back. But for now, the stock candle looks good, and we are now consolidating for the last 9 months or so. And if we break out from this zone, then we're probably heading to this level over here. Okay, and volumes also in the last few months, whenever we see there's been good volumes. So I think this is accumulation, and we might probably break out soon, right? So zooming in, this is also a trend line reversal. Now remember, I focus on trend line reversals. Now if a stock is not near the trend line, probably I won't focus on that, because that's my core strength, and that's what I look at. I know how to ride these trends, and that's why I'm teaching you as well. right? Especially when you have confluence of supports. Now, this is a confluence of support. We have the support zone, horizontal support plus a trend line support. Now, that's a confluence of support. And I think we are having very strong green candle on the weekly chart. CCA has crossed 100, and also on the relative strength, also is looking very good. It has crossed the 52-week moving average. So overall, I think once we break out from this trend line resistance, we are probably heading towards levels of 870. So you can buy the stock current market price, keep a stop loss on 20%, which is 440. Now, this is deep, I know. If you want to buy, then you have to probably wait for a small consolidation, see if the stop loss fits you, and then you can buy. But you can also take a first position, as I said before, and then add on to the position whenever you see a tight stop loss or whenever you see any opportunity to buy the stock more, right? So you can look for targets of 870, which is that zone which I mentioned here. But if we break out of the zone, then we're going to have a very good move in the stock. Don't miss that. Try to ride the rain as much as possible. Okay, so that's 3 times the risk that we're taking, and that's the last stock for today, which is ISGEC. Now, if you do like my channel, if you do like my analysis and my take on the stocks that I share, do subscribe to my channel and do like my video. But don't forget to share this video with your friends and help them learn as well. So that's it for today. I'm going to leave you here. Take care, stay safe, and trade safe. Until I see you in another video. Bye-bye.